Welcome everyone. In this video, we will be talking about bullish inefficiency. And just like in the previous video, a recap, inefficiency is basically an imbalance in price. So for every, buy position, there needs to be someone on the opposite side of the market selling, okay? So there needs to be on both sides of orders on every position. So when we see inefficiency, we should see a sharp move to the upside and leaving, from wick to wick, a gap or a void or an imbalance, right? So there's only buying orders that were offered in this particular area of price action. There was only buy slippage, right? Only buy slippage. So what happened was price spiked up, got this little consolidation phase, and the market came back down to fill that void, to fill that inefficiency. And as you can see, this would have been basically a zero drawdown trade for very, very great reward. And so yeah, that is bullish inefficiency.